at DERIV Trading Academy. Okay, so as usual, this week we're gonna analyze our weekly watch list. Okay, we're gonna analyze whatever instruments that we have on our focus list this week. Unfortunately, we do not have much on our list. We only have volatility 10 1S index on our watch list this week, which is the one that you are looking at right now. Last week as well, we had one instrument on our list, of which we did not get any chance to get in. Okay, we did not get any chance to get in on that one. And I just hope maybe this week we're gonna have that opportunity to get in. The reason we did not get in is not because of I was busy or whatever. It is because of the market. The market did not allow us, did not give us that opportunity to execute in accordance with our strategy. Okay. As you can see, just a little bit highlight of what happened last week, because last week we had volatility 10 index. As you can see, this is what happened last week. We were expecting a buy, of which it happened, but then there was no clear opportunity. You see that level that I spoke about on Sunday, this was the level. It rejected it. It rejected it. Market rejected, or the buyers rejected that buy. I mean, the sellers rejected that buy, which is why it kept on failing whenever it was trying to go up. It kept on failing. So, which is why we did not get in. But then this week, we hope to get that opportunity, even though that opportunity won't be today. Okay, so here is what is happening here on volatility 10 1S index. Okay, what we are looking at is our weekly time frame or our weekly candlestick. Okay, in according to our time frame. This is our weekly time frame. Okay, so looking at it, what do we see? Just like we normally do, we start from the top going all the way down. That is top-down analysis, meaning we analyze from the top time frame up to the down time frame, or the high time frame all the way to lower time frame. In this case, or in this strategy, our highest or our higher time frame is our weekly time frame, and then our lower time frame or our lowest time frame is our M15 or 15 minutes time frame. So let us start with the weekly time frame, which is the highest time frame. Okay. With the technical analysis, or basically, let me just say, with the trading, within the trading industry, what do we do when we analyze? We study the history, we study the previous to predict the future. We study history to predict the future. Events. Okay. So on this one, whenever you are looking at the charts, on a particular time frame. Studying this candlestick, what do we see? We have our opening price for this week here, for this candlestick. We have our opening price and we have our closing price. Those prices are very important for you as a trader, okay, to know. Here was our opening price, and here's the closing price. Now, the distance between the opening price and the closing price says a lot about the market, says a lot about what might happen in the next candlestick. In this case, looking at this, you can see that the body is long, or the distance between the opening price and the closing price is long. That means the sellers were dominating the market on that particular week. In this case, which is last week, the sellers dominated almost the whole week. Okay, so always know, the longer the body, the longer the body of the candlestick, the stronger the bulls or the bears, whichever that will be in control, or whichever that was in control on that particular candlestick. So in this case, the bears were in control, they were in dominance for the whole week. Okay, so which is likely for it to continue happening because of this, because of the land, okay, because of the body. It's not only the body that we consider. What else do we need to know? Okay, we need to know the areas, the zones, the playing zone, the playing ground. We need to know that even though the sellers were in control last week, and there is a possibility that the sellers might continue to be in control even for this week, but there is something that might disturb that, or disturb the sellers from continuing to sell. What is that? The support level, or the support zone. Let me put it this way. You see this area here, this white area. In this area, you do not want to see yourself selling on this area. Why? Because this area is a buying area. Okay, it's a buying zone. Okay, it's a buying zone, this one. So you do not want to see yourself selling in this zone. Might as well need to consider selling. Okay, meaning that if ever we get a chance to sell here. Our TP, the moment it touches this area here, you must consider just take your profit. Or if you're still in, maybe wait for that reversal candlestick, especially from H4 and daily candlesticks. Okay, so this is our weekly time frame, and this is what happened last week, as you can see. Okay, so up to so far, if we zoom out, okay. If we zoom out, let's just zoom out. As you can see, the market is ranging over from this period. Okay, from this period all the way there, the market is ranging, meaning this zone or this buying zone or this selling zone have been respected multiple times. Okay, so you do not want to find yourself buying in this area, and you do not want to find yourself selling in this area, because this area proved to be strong enough to reject every sell to continue, and this point have proved enough to continue rejecting the continuation of the buyers. Okay, so in whatever that you do, whatever happens, if you get a chance to get in, make sure that whenever the market is playing in around this area, you take your profit if it happens. Okay, this is our weekly time frame. Now let us go down with our time frame. The next one is our daily candlestick. So here on our weekly time frame, it says that we must consider selling. That's what it says. What about our daily candlestick? Is it saying that we must sell? Also, forget about this because it has not yet closed. We need to consider this. This is a doji candlestick pattern, if you know. Okay. What does this mean? Basically, this one shows a possibility of shooting up, but it needs other factors of confirmation for it to be true. So what do we want? We want a sell, not a buy. So it is pointless for us to even think about buying when our aim is to sell. Okay. So as it is, we cannot sell, not today, maybe tomorrow. Depends on how this candlestick closes. If it closes maybe below, then we can consider selling. But if it closes like the way it is behaving now, then we might as well consider selling the day after tomorrow. Okay, which is Tuesday. Okay, so for the sake of analyzing, I'm gonna go down with our time frame again. Okay, let me just try to still the same thing. Whenever it reaches this level, you might need to consider taking your profit. Okay, so let us go down with our time frame. H4. Here's our H4. Previously, this is our previously H4 candlestick. What happened there? The sellers were in control, but then were they strong? They were never strong. Why? They even failed to engulf this candlestick here. So they're not that strong. By the way, the body is short, which is why the market behaved the way it behaved. So even if everything was checking out, the fact that this body was very short, it must have gave us a warning that this was not a good time to sell. Okay, let us go down time frame H1. Again, previous candlestick, as you can see, buyers were in control. We are not considering a buy here. We are expecting a sell. We want a sell opportunity. So this is going against us. So we do not need to enter. Even on our M15 time frame, still the same. Previously, this candlestick here, it shows that it's buying. So we don't need to buy, because our strategy says that we must consider selling unless you are using another strategy. Thank you guys for whoever that will be watching this video. Today is the 2nd of April. So that you enjoy your week ahead. Thank you guys. Enjoy guys. Thank you.